Have you ever wondered what it takes to build an empire from scratch? To see an opportunity that everyone else overlooks and turn it into a global powerhouse? This is the story of a man who did just that. A man who, with less than $500,000, laid the foundation for a company that would one day manage nearly $1 trillion. This is the story of Stephen Schwarzman and the building of the Blackstone giant. Our story begins not in the gleaming towers of Wall Street, but in a modest home in Philadelphia. Born on February 14, 1947, Stephen Schwarzman was the son of a dry goods store owner. From these humble beginnings, there were few signs that he would one day become one of the most powerful figures in global finance. His journey wasn't a straight line to the top. It was paved with relentless ambition, sharp intellect, and an uncanny ability to see the future. His academic path was as unconventional as his later career. He attended Yale University, but interestingly, he didn't major in economics or finance. His intellectual curiosity was broad, a trait that would later serve him well in the multifaceted world of investment. The real turning point in his education came in 1972, when he earned his MBA from the prestigious Harvard University. Armed with this degree, the doors to Wall Street swung open, and he stepped into the fiercely competitive world of investment banking, joining the legendary firm Lehman Brothers. At Lehman Brothers, Schwarzman's talent was immediately apparent. Despite being a newcomer with no prior banking experience, he was not relegated to the sidelines. Instead, his superiors recognized his raw potential and thrust him into the heart of the action, assigning him to major, complex deals. He absorbed information like a sponge, mastering the intricate dance of mergers and acquisitions. His rise was meteoric. In a remarkably short period, he climbed the corporate ladder, becoming a managing director, and eventually the head of Lehman's global mergers and acquisitions business. He had reached a pinnacle that many on Wall Street spend their entire careers striving for. But for Schwarzman, this was not the destination. It was merely a training ground. By the 1980s, after years of navigating high-stakes deals and observing the inner workings of the financial world, a new vision began to form in Schwarzman's mind. He saw a vast, untapped ocean of opportunity in an area that his own firm, and indeed most of the established players, dismissed: private equity. He believed that by acquiring companies, improving them away from the public eye, and then selling them, immense value could be created. He took this groundbreaking idea to the senior executives at Lehman Brothers, proposing they start a private equity fund. Their response was a resounding no. They couldn't see the potential. They were unwilling to take the risk. It was a rejection that could have extinguished his ambition, but instead it ignited a fire. This pivotal moment of corporate blindness became Schwarzman's moment of clarity. He realized that to pursue his vision, he had to leave the safety of the established world behind and build his own. Along with his trusted colleague and mentor from Lehman, Peter Peterson, he made the audacious decision to strike out on his own. In 1985, with a courage born of conviction, they founded Blackstone. Their initial capital was a mere $400,000, a paltry sum in the world of high finance. Their first office was humble, and their initial business model was a familiar one: an M&A advisory firm leveraging the skills they had honed for years. But this was just the first step. Their true ambition lay in the uncharted territory of alternative assets. Blackstone quickly pivoted from just advising on deals to making them. They became pioneers, venturing boldly into private equity, real estate, and credit, long before these became mainstream investment classes. They were charting a new course, writing the rulebook as they went. The journey was anything but easy. Early on, a significant investment went sour, threatening their fledgling enterprise. The experience was a painful but invaluable lesson. It taught Schwarzman a core principle that would define Blackstone's culture forever: never go it alone. From that day forward, every major investment decision had to be debated, scrutinized, and unanimously approved by all partners. This rigorous, collaborative process of due diligence, examining risks from every possible angle, became the bedrock of their success. As the years went by, Blackstone's reputation grew. Their strategy of buying, fixing, and selling companies proved incredibly successful. They were not just financial engineers. They were active owners, working to make good companies great. Their portfolio expanded, and their influence spread. The firm that started with less than $500,000 was now managing billions. The culmination of this incredible growth came in 2007, a landmark year for the company. Blackstone went public, listing on the New York Stock Exchange in one of the most anticipated IPOs of its time. The world now saw what Schwarzman had envisioned decades earlier. Following the IPO, Peter Peterson, his co-founder and friend, retired, leaving Stephen Schwarzman as the sole chairman and CEO. He was now the undisputed leader, the architect and guardian of the empire he had built. Under his continued stewardship, Blackstone didn't just maintain its position, it soared to new heights. It weathered the 2008 financial crisis, a storm that wrecked many of its competitors, and emerged stronger than ever. Today, Blackstone stands as one of the world's largest and most successful alternative asset managers. A true colossus of the financial world, with assets under management that have climbed towards an astonishing $1 trillion. The secret to this monumental success lies in a set of core principles that Stephen Schwarzman has championed throughout his career. First and foremost is his unwavering belief in alternative assets. He saw the potential in private equity when Lehman Brothers and the rest of Wall Street were blind to it. This ability to see value where others see risk is the cornerstone of his philosophy. Second is diversification. While pioneering new asset classes, he understood the importance of not putting all his eggs in one basket, creating a resilient, multi-strategy firm that could thrive in any economic climate. Perhaps one of his most counterintuitive principles is a willingness to pay a high price for a high-quality asset. While others hunt for bargains, Schwarzman believes that if a deal is strategically brilliant and offers significant potential for improvement, paying a premium is not a risk, but a wise investment. The iconic 2007 acquisition of Hilton Hotels, right before the financial crisis, is a prime example. Many called it a disastrously timed, overpriced deal. But Schwarzman and his team saw the long-term value. They held on through the downturn, transformed the business, and ultimately turned it into one of the most profitable private equity deals in history. Underpinning all of this is a fanatical commitment to comprehensive analysis. The not going it alone principle evolved into a culture of exhaustive due diligence. Before any capital is committed, Blackstone teams conduct a deep dive, analyzing not just the target company's finances, the micro level, but also the entire industry, competitive landscape, and global macroeconomic trends, the macro level. No stone is left unturned. This disciplined, risk-averse approach to decision-making is what allows a firm known for bold moves to consistently protect its capital and generate outstanding returns. From a boy in Philadelphia to the king of private equity, Stephen Schwarzman's journey is a powerful testament to the force of a singular vision. It's a story about the courage to defy convention, the resilience to learn from failure, and the discipline to build an enduring institution. He didn't just build a company, he created an industry, and in doing so, reshaped the world of finance. His story is a profound reminder that the greatest empires are often built not on inherited wealth or conventional wisdom, but on the audacity to see what others do, and in the tenacity to turn that vision into reality.